Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Wednesday, November 13th, about 6 a.m. Central Time. Overnight, the precious metals are stabilizing as bargain hunters see $30 and $2,600 as value zones in both gold and silver. Checking out the overnight price action here. December gold, high of the overnight session, 26.1910. Low of the overnight session, 26.0370. Where's the market trading last? 26.17. So we're near the high of the overnight session, and we held that psychological level of 2600. We only had that brief dip, and it was really in the overnight session here yesterday in the overnight. We got down to about 25.95.30 or so. Looking at December silver, 3103 and a half last. The overnight session, 31.15 being the high, 30.75 being the low. So something to note on the silver market, we recaptured $31. Looking at the copper market here, 413 last, kind of flat in the overnight session. So something to note on the copper market, I listen to a lot of financial news, especially early in the morning. I get up right around 4:30, but I listen to mostly Asian financial news. Just like we have US, we've got Bloomberg, we've got CNBC. Well, they've got their own Asian financial news networks. And what it does is it gives me some kind of clue as far as how they look at their economy and then how that kind of reflects on different commodities that we trade over here. Now, oftentimes I'll get kind of a change in the perception that they have on their economy, how the stimulus measures, how their fiscal measures are going, and how the government is really responding to the deflationary measures that we're seeing over there. And then I'm able to front run that looking at copper, silver, and the aluminum market. So aluminum futures down 14 at 24.93, and then platinum futures trading at 9.53. That's up $5.20. Lower the overnight session is 9.50. Something to note here is that platinum and palladium are trading closer to parity right now. You do have that palladium futures trading at 9.55 last. I see a lot of the self-directed guys come in and they start to attack the palladium market when you get that drop below the platinum market. So oftentimes you see palladium trade at a premium to the platinum market. So not a trade recommendation out to the public, just an observation that I see here on the way that market participants come in and interpret these things, where palladium futures should trade at some kind of premium to the platinum market. Now looking at the gold silver ratio here, 84 to 1. Yesterday we saw about 85.5 to 1. You do have crude oil futures flat. They've come down to kind of this 65 being the floor, 68 being the top end of the range, and we're trading right around in that range here at the moment. Remember when Trump was the president, we saw the market really with the drill baby drill dip below that 65 region. I think that it's been about 8 years later, so a lot of these commodities are trading just a little bit higher here, especially the ones that are really dependent upon his policies and things like that. The S&P 500 trading right around 6,000, and the dollar index just flat here to slightly negative. So global stocks, they are edging a bit lower. The dollar index, its recent surge is stalling near the 2-year highs, and treasury yields are flat. Bitcoin futures also dropped below 90,000, trading right around 88,000 last. And I think that the markets have really digested much of the implications of a Trump presidency. So getting to a couple of things here. Hedge funds, they really unwound a lot of their bullish wagers on the precious metals and ETFs, and they've rotated into US equities, they've rotated into Bitcoin, they've come out of a lot of different markets here and kind of readjusted. And I think that you kind of look at where we were at in 2016, you fast forward one week later after the election, a lot of these markets are reflecting kind of the same type of developments here. Gold futures in 2016 were down about 5, 6, 7%, and we're seeing the same results in 2024. Now, a couple things to note here is that the market, and if you're a precious metals bull, really if you break down that silver, copper, aluminum, platinum, they're all kind of playing off of cues from China. You look at the gold market here, it's really playing off of what economic regime are we in and where are we going. So there's two different things that are battling right now. You've got the reflation where you get the increased growth. That's where your US equities are going up. That's where your dollar index are going up. Remember, the S&P 500 and Bitcoin and the dollar index all closely correlated at the moment here, and gold hates that particular regime here. What gold really loves is stagflation, which is what we saw coming in ahead of the election, where you get inflation kind of slowly rising in the backdrop, and then you get that growth starting to stall out here a bit. So that's where gold really takes off. So my advice to you is kind of to play both of these regimes at the moment in some kind of capacity and watch your position sizing. Now today we're going to get a bit of economic data coming out here. We will see the latest reading from CPI, and it's expected to show that inflation moved kind of sideways here in October, but we have a small bump up here above that Federal Reserve's 2% target. So we expect inflation to be about 2.6% year over year in October, and that would be up from 2.4% here on the previous month. You're going to get your core CPI. That's going to be in line with expectations, right around 0.3%, and also your month over month just in line as well at 0.2%. Something to note here, if you go to the CME's Fed Watch tool, it is coming off a bit as far as the expectations of a December interest rate cut. They're expected to be about 58% chance. So we're getting closer to that 50-50 level according to the CME's Fed Watch tool. And if you go 1 week ago, the chances of that were about a 70% chance. So a lot of things to note here, some key levels that you might want to write down. Few things. First, on the silver chart, pull up a daily chart of the silver. Throw up the 100-day moving average, and I'm not a moving average guy at all. You'll see that silver futures, they bounced off that level in October. They're also bouncing off of that level in November. We did break below it yesterday. However, we closed above that level. Now, also what's more important is when you print off that daily chart, you want to circle some of the lows. Circle the August low on silver, circle that September low on silver. You'll notice that those are higher lows on the chart. Go to October, right around the start of October, circle that low as well, and you're going to see 3 higher lows. Now, what you'll notice is that there's a double bottom on the chart where you get the November low and then you get the October low. So you don't want to see it break below that October low, because if you get a break below the October low, what's going to happen? We're probably going to trade down and start matching that September low and then consolidating around these levels. And that's where you get more of a neutral stance. Although silver has triggered a bearish posture in the market, the fact that we are starting to bounce off of those tells you that it's not an aggressive short selling opportunity on the precious metals. And if you know me personally, I don't have feelings about any commodity whatsoever. I just try and be like water. Like Bruce Lee said, just go with the flow here and just attack the market in any direction that it goes. So looking at the dollar index, I would circle 104 on the chart. That's the critical level. Although it's 2 handles higher, we break below 104 on the dollar index, it's going to be game on for these precious metals. The gold market, really, it's got to chew through a lot of different levels here. We got to get above 2667, and if you look at my pin chart here, 2635 shows it should be about the high of the session here, the trading session today. However, we should see a small surge in volatility with CPI coming out, and I think a lot of the market participants had left the precious metals, so they could come in and you could see a rush in volatility. Looking at the silver market here, again, your next major level, I would say perhaps maybe the 50-day moving average, 3174. But if you look at my chart, it's going to be 3134 and then also 3160 as your high on volatility. Copper futures really need to find that level where it starts to stabilize and turn up. And I think if you can get copper futures finding that bottom, starting to work its way higher, gold futures turning up as well, that's where you kind of get that 1-2 punch again in the silver market. So a lot of things, this is kind of more a wait and watch, see how markets digest the sell-off, see if some of these key psychological levels hold this overnight trading session. So you got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.